Good morning, and thank you for joining us. My name is Adrienne Gallegos. I'm the Associate State Director for the New Mexico Small Business Development Center. And today we have Peggy McDonough. She is going to present on PPP EIDL grant and ERTC possible tax implications. Peggy is a SCORE mentor. She is a CMA, which means Certified Management Accountant, so you can't beat that. And she holds her MBA. A little bit of housekeeping real quick. We are going to use the Q&A. So if you have any questions, make sure down at the bottom there is a two little bubbles and they have a Q and A. Use that for your questions and I will monitor that, and we're going to go over questions at the end of the presentation. More than likely, Peggy will answer a lot of questions that you may have during the presentation, but rest assured we will get to all questions at the end of the presentation. There was a survey sent to you, your post survey, so make sure, and we really would appreciate if you'd get to that survey so that that feedback that you give us helps us to improve and continuously improve our offerings and our trainings. Also, lastly, these slides will be distributed. So if you've registered for this workshop, we will send you the recording and the slides. So without further ado, I will turn it over to Peggy McDonough. Thanks, Peggy.
Thank you. First of all, I also want to thank you very much for joining this morning. SCORE and the New Mexico Small Business Development Center, we work in collaboration to provide small business owners with professional training and support. So today's webinar is an example of this collaboration, and I truly hope that you'll find your time today productively spent and useful for your business. As was mentioned at the beginning, do not use the chat function during the webinar. We're not going to be really monitoring that, but we will be looking at the questions and answers at the end of the presentation. And if you can, when you do write your question, please put the slide number also on your question so we can find it quickly if I have to go specifically back to a specific page in the presentation. Now, first of all, SBDC is prohibited from giving tax or legal advice. So any tax-related questions, accounting questions, or specific questions about your company can only be answered with credible authority by your accountant or attorney. So please keep in mind also that the information we're covering today is changing rapidly and is based on the current understanding of the programs. It can and likely will change. And although we will be monitoring and updating this webinar as new information comes available, please do not rely solely on this for your financial decisions. We want you to consult with your lawyers, your CPAs, your payroll experts, and your financial advisors. They're going to know your situation and be able to help you. So what do we want to accomplish today? Well, I'd like to have you walk away from this webinar with a better understanding of the tax impacts from various COVID relief programs that have been signed into law by Congress over the last year and a half. We'll be starting with the Coronavirus Preparedness and Response Supplemental Appropriations Act, quite a mouthful. This was signed into law in March of 2020. And we'll be ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. So I'd like you to leave today more knowledgeable and with guidance on what questions you need to ask your CPA, your tax attorney, or your payroll professionals in order to help you make better decisions for your business. We're going to be focused on 3 specific programs. The Payroll Protection Program, commonly called PPP, the Economic Injury and Disaster Loan, called EIDL, and the grant, and also the Employee Retention Tax Credit, sometimes called ERTC, or sometimes just ERC. We're going to be looking at reviewing the timeline in the background. How did the money get, what act created some of these programs? how did the money get into the programs, and which act created the money for the programs, and where they currently stand. We're going to talk a little bit about the tax implications and the expectations from the tax authorities on the small business owner, and answer a few of the frequently asked questions. And again, as I said, we'll end today's webinar by addressing any questions that you may have. So let's get started. It's been a long and bumpy road the last year and a half. And on March 6th, Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriations Act. Now, what this did is it helped the Small Business Administration. And it helped them, the act declared the coronavirus outbreak is a disaster. This opened the door for the SBA to use its lending authority to make the economic injury disaster loans, or EIDLs, for small businesses that have been impacted by the pandemic. The next thing that happened, which is only a few weeks later, was the Coronavirus Aid, Relief, and Economic Security Act, commonly called CARES Act, and that was signed into law. This act created the PPP, or the Payroll Protection Program, and it provided nearly $349 billion in PPP loans. In early May, Congress provided an additional $320 billion in funding. The EIDL grant was introduced to pay SBA's EIDL applicants in advance on their EIDL loans. These advances were treated as tax-free grants and did not need to be paid back. The funds were exhausted in July of 2020. Then we have the Employee Retention Tax Act, it was tax credit that was enacted. The ERTC is a fully refundable tax credit for employers equal to a percentage of qualified wages. And these qualified wages include health plan expenses and that are eligible, that they pay to their eligible employees. Then as December came along of last year, we had the Consolidated Appropriations Act. It was signed into law, and embedded in that act was an additional $900 billion in COVID relief. And $300 billion of that is in aid for small businesses. $284 for SBA for first and second PPP forgivable small business loans, as well as $20 billion to provide EIDL grants to businesses in low-income communities. And March 11th, we had the American Rescue Plan Act of 2021, and that was $1.9 trillion. That was voted on March 10th, and it was signed into law by President Biden on March 11th. And it provides small businesses assistance, including specific programs for restaurants and live venues. And then last but not least, on March 30th, the PPP was extended by, application was extended by President Biden. Now, each of these laws and each of these acts refined, created more money, gave clarity for some of the funding that is that went out to the small businesses. So each act did add more money, more clarity, like I said, as well as the IRS added more clarity. So as with most acts that go into law, Congress thinks at a very lofty level, and there's not a lot of detail when they do pass a law or an act. So a lot of organizations can be impacted. You have the IRS, the Small Business Administration, banks, CPAs, business owners. And the problem is that Treasury and IRS tax laws and guidance have lagged, and they are confusing in some instances, as well as they're contradictory. They introduce new forms, new applications, confusing interpretation in a constantly changing environment. And this means to you as a small business owner that you're going to have to deal with business situations and tax implications that you've never seen before. So let's first go into PPP, or the Payroll Protection Program. PPP is a loan designed to provide a direct incentive for small businesses to keep their workers on the payroll. It's an 8 to 24-week period, and there's been several draws on this. So the first draw was the CARES Act. And these are loans that can be used to fund payroll costs. They can include benefits, but they also can be used to pay for mortgage interest, rent, utilities, worker protection costs related to COVID-19, uninsured property damage costs caused by looting or vandalism during 2020, and certain supplier costs and expenses for operations. So it's not just payroll, it is an expanded loan. The money was scooped up by large businesses very quickly, leaving the small businesses unable to apply. Money was gone, I think, within just a few short weeks. So then they had, in the Consolidated Appropriations Act in December, they had a second draw. And that allows certain eligible borrowers that previously received a PPP loan to apply for a second draw with the same general loan terms as the first draw. That ended, unfortunately, in May of this year. The application did for it. But the good news is, if you were able to get a PPP loan, they also have the loan forgiveness clause. So a borrower who did get this loan can apply for forgiveness once all the loan proceeds for which the borrower is requesting forgiveness have been used. So if you used up that money, you now can go ahead and request forgiveness. You can apply for forgiveness anytime up to the maturity date of the loan. Now, I'd like to at this point emphasize that there's a lot of misinformation out there. And a lot of people think that you only have 10 months after you've used that money to ask for forgiveness. That is incorrect messaging. I've seen it on the internet. I've seen it in the media. You can actually apply for forgiveness anytime up to the maturity date of your loan. So if you do not apply for forgiveness within 10 months after the last day of the covered period, then you do have to start paying, you need to start paying loan payments, but you can still ask for forgiveness. If you want to take this approach, please work with your PPP lender. They'll be able to give you more specific information and help you with the process. Also, SBA does offer free counseling and training events to help you with the PPP program. As you can see, it's at www.sba.gov. It's a great site. It gives a lot of information on all of the programs that they offer, and it has a lot of frequently asked questions that can give you more detail that may have more specifics for your small business. The CARES Act spelled out that the forgiven loan amount won't be included in taxable income. You don't pay taxes on the money you receive from the PPP. This loan is to provide businesses with the money to keep running and continue paying employees, and was never meant to create a tax burden for businesses receiving the fund. With the Consolidated Appropriations Act that was passed in December of 2020, they gave more clarity on how the expenses covered by a PPP loan will be treated. So previously, anything you spent your PPP loan on was not going to be tax deductible. With the passing of the Consolidated Appropriations Act, these expenses are tax deductible. Simply put, your PPP loan will not affect your tax filing process. Forgiven PPP loans are not taxable. Now, this is interesting because historically and forever in the past, if you had a business loan and it is forgiven, that is automatically taxable income. And it's been in the Internal Revenue Code forever. However, with this PPP Protection Program loan, they broke from that code, and Congress specified and the IRS has clarified that forgiven PPP loans will not be counted as income. So this applies whether your entire loan is forgiven or just a portion of it. So this loan is to provide money to businesses to keep running and continue paying their employees, not to create a tax burden. Simply put, your PPP loan will not affect your tax filing process. Now, though Congress has walked back the IRS stance on the PPP and its relation to deductible income, that doesn't necessarily mean you can leave these funds out of your conversation with your 2020 and 2021 taxes. Whether you receive PPP funding in its first iteration, first draw, or later on in 2021, you really have to be careful when it comes to taxes. And that's because there are still a lot of unanswered questions. Now, some of these questions stem from confusion in the application process itself. In some cases, applications woes meant businesses received money that they weren't qualified for in the first place. For example, a company might have stated that it had employees when it only had independent contractors. While that may seem like a case of semantics to the layperson, that kind of difference could have major implications when it comes time to file your business taxes. And how your funds are used is also important to keep in mind. Any money that the business owner used to pay something else that is not included in the PPP requirements, that will have to be reported as income and expenses on the business tax return. So it is imperative that you keep clear and concise bookkeeping. Your signed PPP loan contract stated that you would produce monthly government-ready financials, and you are required to have bookkeeping in place. If you don't, you could suffer penalties and fines or trouble with an audit. It helps if you have separate accounts to identify your PPP loan. For example, other income PPP loan non-taxable is a good general ledger account to put it in to keep it separate from your other business doings. It's also important to adjust your tax planning estimate to include any PPP expenses that were formerly non-deductible. If you happen to have received a PPP loan, expect a tax audit. In recent months, the SBA and the US Treasury have announced that all PPP loans in excess of $2 million will be audited, but any loans that are less than 2 million are subject to an audit. Now, much lower loans have been and will continue to be scrutinized. There is a higher probability if you've received PPP that the IRS will audit you. And they have also developed a hotline for anonymous callers to report possible fraud. So please be aware of that. Particularly if you have a disgruntled employee who calls that line. It's anonymous, doesn't mean that they're telling truthfully what they on that line, but it could implicate you if you're not aware that that's out there. That's why it's important to keep very solid and concise records. So how do you help ensure a smooth audit process? Well, first of all, please don't procrastinate. Begin compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records, and your PPP documentation should be kept on file for at least 6 years after your loan is fully repaid or forgiven. Make copies to send, but always retain your originals. And most important, hire a CPA who can represent you and defend your business against the IRS if necessary. So does your PPP, here's a few, I'm going to go now into a few of the frequently asked questions. So does my PPP count as taxable income? No funds from your PPP loan, whether forgiven or unforgiven, are counted as taxable income. You will also be able to claim a deduction for expenses using your PPP funds. If my PPP loan is not forgiven in full, does that mean it counts as taxable income? Again, as with other business loans, funds from your PPP loan that are not forgiven do not count as taxable income. Can I write off payroll and other business expenses if I used a PPP loan to pay for them? If you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with these funds. Expenses that were not paid using PPP funds can still be written off as usual. Even if your PPP loan was not forgiven, payroll and other business expenses may be written off on your tax return. Can I use my PPP loan to pay business taxes? Absolutely not. Funds from your PPP loan may only be used to cover payroll costs, utilities, rent, or lease payments or mortgage interest. PPP loan proceeds cannot be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Businesses that have received a PPP loan can still defer payroll taxes through the end of year 2020 and 2021. And again, will PPP loans be audited by the IRS? According to the US Treasury, all PPP loans that exceed 2 million will be audited. And the IRS may audit all other loans, so it's best to be prepared, even if you received a much smaller loan. So does your state tax forgiven PPP loans? This shows that New Mexico does not tax forgiven loans, PPP loans. Now this is a document, please be sure that you work with your CPA to confirm this, because again, changing information, but at this point in time, New Mexico does not tax forgiven PPP loans. So let's talk a little bit about EIDL, or the Economic Injury Disaster Loan. It's a loan option and it's available through SBA. Now the PPP is available through banks and you work with your lenders. This one you work directly with the SBA, and it's to help businesses that are struggling with financial hardship during COVID. Though SBA disaster loans have been available for years, the EIDL was signed into law in March of 2020 as part of the CARES Act, which was passed by Congress to provide emergency relief to American workers and small businesses that were struggling to survive due to the impact of COVID-19. So if you are a small business or a nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees that have suffered substantial economic injury as a result of COVID, you can apply for the COVID-19 EIDL. These loans do not go through a lender, as I said. They come directly from SBA disaster assistance, and it costs you nothing to apply. So if you're interested in this, you can get a hold of this at the disasterloan.sba.gov. Now, what is the EIDL? The EIDL is a loan, hence the L in EIDL, and it is treated the same as every other business loan as far as taxation is concerned. In other words, funds from the EIDL are not reported as taxable business income on your tax return. But in addition to the EIDL loan, there's something called an EIDL grant. Now, when the first CARES Act was created, they had a lot of what they call advanced grants. All of that money was used up very quickly, and it was used up by a lot of the bigger businesses, and the smaller businesses kind of lost out on it. So in order to make sure that smaller business got a chance at some of this money, they have created what's called a targeted EIDL advance, and that's up to $10,000, as well as a supplemental targeted advance of $5,000. These are grants that do not have to be repaid, and the SBA is now encouraging all eligible businesses to apply. Now, this money is limited, so please be sure that you get the most current information on this money, because it is going, and at this point in time, there was some left. So the grant money was part of the initial CARES Act in 2020, but as I said, the funds were exhausted within weeks. So in December, Congress allocated these additional funds and established what they call more targeted eligibility criteria. So in order to be considered for one of these grants, your business must meet the eligibility requirements and apply or have applied for an EIDL loan. However, if you apply and you get something, you do not have to get or accept the loan to get the grant. It's just part of that application process. So do I qualify for a targeted EIDL advance? Well, in order to be eligible, you have to be located in a low-income community. You have to have suffered an economic loss greater than 30%, and you have to employ not more than 300 employees. In addition, the business must also qualify as an eligible entity as defined in the CARE Act. Again, the CARES Act was the first one. Small business, cooperative, an ESOP tribal concern with fewer than 500 employees, an individual who operates under as a sole proprietorship with or without employees, or as an independent contractor, or private, nonprofit, or small agricultural cooperative. The business must have been in operation by January 31st, 2020, and the business must be directly affected by COVID-19. So exactly what do they mean by economic loss definition? That's pretty vague. Well, it's the amount by which the gross receipts of the covered entity declined during an 8-week period between March 2nd, 2020 and December 17th, 2021, relative to a comparable 8-week period immediately preceding March 2nd, 2020, or during 2019. And how do I demonstrate economic loss? Well, getting your business tax documents organized and up to date will be essential in applying for this grant and demonstrating that you qualify. And what exactly is a low income area? Well, the SBA has released an online tool to help borrowers understand if they're in a low income area, and noting that the business address must be located in a low income community in order to qualify. So SBA encourages potential applicants to check the map to see if they meet the low income eligibility requirement before you apply. Again, it's an online tool and you can see it on the sba.gov site. And it goes right in. What you do is you put in your zip code and it brings up a map by street that allows you to see if your address falls within this criteria. Well, those are targeted, and I just talked about. What's the supplemental grant? So in March of this year, they added an additional $5 billion in funding for supplemental targeted advances of $5,000 to those businesses that have been hit the hardest. So how do I qualify? You have to have suffered an economic loss of greater than 50%, and you have to employ not more than 10 employees. And this grant, the supplemental grant, is in addition to the $10,000 targeted grant, EIDL grant. Now, just to let you know, the SBA will reach out to small business owners who applied for the targeted advance if they appear eligible for the supplemental grant. So getting your business tax documents organized and up to date is going to be essential for applying for this grant and demonstrating you qualify. So what are some of the tax implications? Well, initially, funds from the EIDL advances I'm talking about now were to be reported as taxable income. But thank goodness, this decision was reversed under the Consolidated Appropriation Act in December of last year. And they do not need to be included in your taxable income when you're filing your taxes. Additionally, qualifying expenses can be written off to lower your tax liability. So legislation clarifies the EIDL grants are not taxable at the federal level, that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with these funds, and that EIDL grants will not be deducted from PPP for loan forgiveness purposes. So please be sure, again, this is a quagmire of taxation information. Please check with your tax advisor about tax implications at the state or local level. Well, we know PPP loans over 2 million are going to get audited. How about EIDL loans? Well, when you receive an EIDL loan, you agree to spend the funds provided for certain business expenses. So as part of your loan agreement, you agree to maintain records and provide these records to the Small Business Administration to be audited if necessary. While there's a chance you may not be audited, please don't skip this step. Maintain your records and be prepared to respond if an audit occurs. Well, what about, does a grant count as taxable income? Not the loan, but the grant. In most instances, grant funds are not counted as taxable income on your federal tax return. So how do I qualify for a targeted EIDL grant? If you previously applied for an EIDL loan, you will receive an invitation by email inviting you to apply for the targeted grant. If you have not yet applied for our EIDL, you can do so at sba.gov. If your business appears eligible, you'll be invited to apply for the targeted advance. You do not have to accept the EIDL loan or even be approved for the loan to get the grant if you qualify. What if I never applied for EIDL? If you have not previously applied for EIDL, you may apply at sba.gov. You will be able to apply for the low interest rate loan, it's very low interest rate, through December 31st, 2021, as long as funds are available. If it appears your business also qualifies for the targeted advance or the supplemental advance or both, the SBA will invite you to apply. Well, can an EIDL loan be forgiven? No. EIDL loans are not advances and they must be repaid over 30 years. So unlike PPP loans, there is no forgiveness process for the EIDL loan. If I apply for EIDL, can I also apply for PPP? Absolutely. Paycheck protection loans may be fully forgiven. And of course, at this point, they're kind of closed on that application process. But if you did apply, you can have both. If you spend a certain amount of expenses, which essentially turns PPP into a grant. And as I said, the PPP loan program is now closed. However, if your business received a PPP loan, you may still be eligible for an EIDL loan and a grant. So businesses can apply for both if they qualify. The next one I want to talk about is the employee retention tax credit. This one is a wonderful option for small businesses who have employees. It's a dollar for dollar advantage and it's a great opportunity. So if you happen to qualify for this, I would definitely take advantage of it. So what is it? It's a tax credit. And it was first put in place last year as a temporary coronavirus relief provision to assist businesses in keeping their employees on the payroll. Now, since then, the ERC has been significantly expanded. And in the most recent relief bill in January, the ERC has been again extended through all of 2021. Now, depending upon when you're applying for this or when you're trying to get this, there are different rules between 2020 and 2021, again, based upon the various COVID relief acts that have been signed through Congress. So for an example, in 2020, you had to have 100 or less qualified full-time equivalent employees. But in 2021, they upped that to 500 or less full-time equivalents. Again, in 2020, the tax credit was up to 50% of $10,000. Now, the tax credit is up to 70% of $10,000. And I have on the next couple of slides, I have an example of the differences between the 2 years. Definitely 2021, they did some significant changes in the credit to the advantage of the small business owner. All right, so let's talk about who is available, who qualifies for this. So if this credit is available to businesses with fewer than 500 employees or 100 in 2020, who either, and this is important that you understand, it's not both. You don't have to qualify on both of these accounts, it's an or. So if you were suspended or partially suspended your business due to COVID-19 because of a government order, or you experienced a decline in gross receipts when compared with the same quarter in the previous year, you are available to take advantage of these credits. Now, there were quite a few series of New Mexico government health orders in 2021, in 2020 and 2021, and each order was effective for different dates, was effective for different businesses. So for details on whether your business which order impacted your business, and the dates when those orders were effective, there is a link here to newmexicohealth.org that gives when each of those various executive orders and the dates they applied for and the details on those orders. So you look at that to see if you qualify and when you qualify. As I said, tax credits, they're a great thing to take advantage of, and they are incredibly valuable because unlike a deduction, which reduces your taxable income, tax credits reduce your tax liability on a dollar for dollar basis. The credit is calculated per employee and is 70% of up to $10,000 in qualified wages paid per quarter. That's in 2021. So qualified wages, well, they include a portion of your employee's earnings which is reported on your IRS Form 941. Is this credit taxable? Well, yes and no. The ERC credit is subject to income tax, but the wages on a claimed credit must be reduced by the amount of the credit, which results in the long run in the credit being taxable income. So reductions in wages may also impact Section 199A of your eligible wages for purposes of the 20% qualified business income deduction. And if the credit is claimed on your 2020 payroll taxes after the tax return has been filed, you can always file an amended income tax return that will be required to accurately exclude wages reduced by the ERC. Now, one of the things I also want to make very clear is there is no double dipping between PPP and ERTC. Again, PPP is specific on payroll, although it does have other expenses that you can be forgiven in that loan. The ERTC is also for payroll. So what do I mean by double dipping? So I'm going to give you an example here. And this is the theoretical company. That's the one that I made up in my head. And the name of this company is Star Technical Support, and they're a small business in Roswell, New Mexico. So when they compared Q2 of 2020, and I've got that highlighted down below, to Q2 of 2019, Star Technical Support experienced a 55% decrease in their gross receipts. Now, in order to qualify in 2020, a greater than 50% increase must be met. So therefore, the business qualifies for the 2020 ERTC. In Q2 2020, Star also received $12,000 of PPP. Now, Star Technical Support has 5 employees, and each of these full-time equivalent employees is paid $8,000 per quarter, and that includes their health insurance benefits. So therefore, in Q2 2020, Star paid their employees $40,000. That's 5 employees times the 8,000 is equal to the 40,000. The tax credit at 50% of qualified wages is 50% times 40,000, which is what they paid that quarter, and that equals 20,000. But they also received a PPP in that quarter, so you have to deduct it from your credit. So therefore, they are eligible for a tax credit of $8,000 after deducting their PPP. Let's give you another example. I'm going to move into 2021, which has different qualifications. Again, another theoretical company. We're going to call this one Fred's Fantastic Car Wash, and they're located in Los Lunas. When comparing Q1 of 2021 to Q1 of 2019, Fred's Fantastic Car Wash experienced a 25% decrease in gross receipts. Now, in order to qualify in 2021, a greater than 20% decrease must be met. Therefore, the business does qualify for the tax credit. Now, they have 10 employees, and each employee is paid $7,000 per quarter. That includes, again, their health insurance benefits. So in Q1 of 2021, Fred's paid their employees $70,000. That's your 10 employees times 7,000, and it equals 70,000. The tax credit at 70% of qualified wages is 70,000. 70% times 70,000 is $49,000. With an annual estimated tax credit for 2021 of $196,000. So that's a lot of good money back to the small business owner if you can take advantage of this particular credit. So let's look at a difference between the 2 years and how much it improved between 2020 and 2021. Now, in the number of employees in 2020 was 100. Now you can have up to 500 employees in 2021. The gross receipt decrease in 2020 was 50%. Now you can have a decrease of 20%, which means more people can qualify for this credit. The wage cap per employee was $10,000 per year in 2020. Now in 2021, it's $10,000 per quarter. The wage credit per employee was 50%, and now it's 70%. So you can see there's been a lot of improvements with the most recent acts and giving back the small business owner a lot of money with this particular program. So how do you file? Well, if your business was not in existence in 2019, you can use the average quarterly wages that were paid in 2020. You cannot use the owner's pay or the owner's relative pay when calculating wages. Now, there's a lot of debate on this, so I want to make sure that you understand that to talk with your CPA. So if you're a C corporation or an S corporation, as far as taxes are concerned, please talk with your CPA. There have been discussions that possibly owners their payments can be deducted, can be used when calculating the wages. You file to apply this credit using your standard form, 941 form. But if you want to file in advance to get these funds in advance, you can use form 7200. This is one of those new forms they developed. Advance payment of employee credit due to COVID-19. If you haven't taken advantage of the ERTC in either 2020 or 2021 of this year, you can file retroactively using form 941-X, which is your adjusted employer's quarterly tax return. So how long do I have to file for tax credit? Well, ladder of 3 years after the original filing or 2 years from paying the tax. Again, please get professional guidance and support when filing. There are a lot of nuances in this particular credit and advantage, and a lot of it is based around what's a full-time equivalent employee. Your payroll professional should be able to help you through this quagmire. But get advice, and preferably a professional who is well informed on current interpretations and laws. As I said, this thing is changing almost daily as it becomes more clarified. Now, while the ERC is certainly a taxpayer-friendly relief provision, the IRS is just not giving dollars away. So they're looking very closely at taxpayer submissions, both on the front end and then auditing down the road. So the best practice is for the business to provide contemporaneous documentation now when first determining whether they qualify. So in order to avoid heartaches and headaches down the road, businesses need to have counsel to properly and fully document and paper how the business qualifies for the ERC. Business owners need to be aware as to whether their company qualifies for the ERC. And please, if you do qualify, don't miss out on this terrific tax incentive. It's going away at the end of this year. So here are some of the frequently asked questions. I can't claim ERC if I've already claimed PPP. Now you can claim both. Congress in the Consolidated Appropriation Act of 2021 removed the limitation on only claiming one or the other. PPP will only account for 2.5 times your monthly payroll expenses, and it's meant to be spread over 6 months. This leaves plenty of uncovered wage expenses for claiming on your ERC. My business did not have a drop in gross receipts of 50% or more. Well, the CAA in December has changed the qualifications so that a reduction of 20% now qualifies. But remember, there's also another way to qualify for the ERC, and that's if your business has been subject to a partial or full suspension due to a government order. You can qualify for this tax credit. My business was not shut down during the pandemic. Well, even a partial suspension order by the government, either federal, state, or local, of your business could potentially qualify you. A partial shutdown, a disruption in your business, the inability to access equipment, having limited capacity, shutdowns of your supply chain or vendors, reduction in services offered, reduction of hours to accommodate sanitation, shutdown of some locations and not others, and shutdown of some members of the business are all scenarios that still could potentially qualify you for this tax credit. So key considerations are due to the government ordered partial or full suspension was that your business was not able to continue its activities in a comparable manner. And did that result in a more than nominal impact on your business operations? Remember that the partial or full suspension is an alternative way to qualify for the ERC, separate from the gross receipts test. My business or my company was deemed an essential business, so I do not qualify because of business suspension. Even if your business is deemed essential, an impact or change in your business can still qualify you. For example, even if you were open, but your vendors were closed down, or you can't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and was impacted by a government order suspension, you may also qualify. My company has grown during quarantine. That isn't something I should take. Great news. Even if your company has grown during quarantine, but experienced a full or partial suspension, there are expenses that may qualify. Sales have rebounded for us in Q1 of 2021. I can't qualify for this credit. With the introduction of the CAA Act, you have the option to look at 1 quarter prior to determine qualification. This means you can determine eligibility based on lost revenue in 2020. You just compare Q1 of 2021 to Q4 of 2020. Also, if you're subject to a full or partial suspension, you may qualify regardless. We were in losses or do not have any tax liability. Again, this is a refundable credit. In practice, this means that any credit overage above tax liability is sent to the taxpayer or the business owner as a refund. My company has grown to over 500 employees, so we are not eligible for ERC. Again, the employee count restriction is based on full-time equivalents, which is a more involved calculation than just counting how many people you have in the office. If you paid an employee to not work or to work less than the hours for which they were paid, then the employee count restriction would not apply for those employees. I'm a charity, and the ERC is only for businesses. The ERC also may provide significant benefit to charities, churches, nonprofit hospitals, museums, etc. In fact, charities can be particularly good candidates for the ERC. Failure to document. Sure enough, that tax man is going to come knocking on your door. And the ERC is a refundable tax credit. So it does provide robust benefits. If you had to draw up a tax provision that makes the IRS lie awake at night, well, it would be this one, because it involves real dollars. Again, there are a lot of nuances in filing for this credit. Make sure you work with your payroll professionals to make sure you get the full credit that you're eligible for. So let's recap. What's the process? Well, basically, Congress votes, they enact laws, they provide government funding. IRS, Small Business Administration, state and local governments, they look at those new laws, they interpret the law and the tax implications. They create new forms and reporting requirements. And CPAs have to follow those interpretations, and they provide guidance to the taxpayer. What's the result? A lot of confusion. There's a lot of restating and clarification and changing forms, and it becomes a bit of a very confusing environment out there. And that's part of the reason why the deadline for the 2020 tax filing was moved out to May 17th this year. It's because they handed out a second round of PPP. There were changes in the employee retention credit. The continued stay-at-home orders made it difficult to access taxpayer data, and the IRS is short on staff due to the COVID-19 pandemic. So bottom line, your 2020 and 2021 taxes are likely going to look a little different than they normally do. This means you're going to have to deal with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. So it's imperative that you have accurate and up-to-date set of books, such as your balance sheet and your income statement. Track and categorize all of your business expenses on both the balance sheet and the P&L. Receipts and invoices should be digitally filed and recorded, and take the time because it is well worth the effort to be able to see where your money is going and ensure you're going to be able to get the most of your eligible deductions come tax season. Again, please keep in mind that this information is changing rapidly and is based on current understanding of the programs. It can and likely will change. As a matter of fact, I made a couple of changes this morning on some new information I found. Although we'll be monitoring and updating as new information does become available, please don't rely solely on this presentation for your financial decisions. We encourage you to consult your lawyers, your CPAs, your payroll experts, and your financial advisors. And make sure that whomever you consult with, lawyers, CPA, payroll experts, or financial advisors, they are up to date on the most recent guidance from the SBA, the IRS, or the US Treasury. All right, do we have any questions?
We do, Peggy. Thank you so much for that information. So Mr. Ortiz is asking for 2021, am I comparing gross revenue to 2019 or 2020? The presentation indicates I could do either. Is that true?
You can compare it to 2019, or you can compare it to the previous quarter. You can do both. And I assume now, and I'm talking about the tax credit on this. And I assume that's what Mr. Ortiz is also referencing. But you can do both. Whichever one gets you to qualify.
Right. Good answer. If that answered your question, Mr. Ortiz, if you want to give me a thumbs up, or if you have more, if you need to type in. That answered his question, Peggy. Thank you. Perfect. All right. Well, we ended about 4 minutes early.
We did, which is great. Mr. Ortiz, I do want to personally thank you for attending this webinar. I hope you were able to take this information. I hope it gave you some questions to ask your professionals so that you can take advantage of some of this money that's still available out there for the small business. Is there anything else we want to go over this morning?
That's all I have in the question and answer.
Okay.
Absolutely. Thank you so much from the attendee.
Thank you very much. And at this point, I will close down the webinar. Thank you.